Hello traders, Gary Wagner here just after 12:30 in Honolulu, 6:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. It is the 18th day of September 2020, and this is the daily report for gold and silver, our weekend review. And what a week we have seen with the FOMC meeting concluding for the month of September and basically confirming what was said during the keynote speech by Chairman Powell at the virtual economic symposium last month. It might be for that reason that we actually saw gold sell off following the release of the statement, the new dot plot, and the press conference. Nonetheless, on today's show, I will make a technical case why I believe that it is still a bullish sentiment and gold will move higher after it breaks to the apex of the current pennant. We'll take a look at that when we pull up our technical studies, but first to the price board. We had a mixed bag in the precious metals, with gold, palladium, and platinum closing higher on the day and silver closing lower. First to gold, basis the most active December contract. That closed up $8.30 for the day, 1958.20. That means that we had a small gain on the week, now the second consecutive gain on our weekly chart. And you can see that right here as expressed in these last two candlesticks. When we look at GLD, that of course is the gold trust. That gained just a little over 0.1% at 183.20. And then when we look at spot gold, that gained $7.25. It's still trading right now, but currently at 1950.96. And then over to silver. Silver did sustain a drawdown. I believe the drawdown we witnessed in silver today is in sympathy with lower stock prices pretty much across the board. S&P closed lower, the industrials closed lower, and the NASDAQ composite also closed lower, down 7 cents at 27.03. And then SLV lost approximately 1.19%, 30 cents per share, currently at 24.93. And lastly, Nugget did sustain a drawdown of about 3.5% at 95.35. And all of that with a dollar that in essence was neutral, closing at 92.99.5. Traders, although we saw gold trade lower immediately following the press conference by Jerome Powell at this week's FOMC meeting, we did see it finish stronger today, gaining $7 or $8. But one thing is apparent. Without a question of a doubt, continue to see gold compressing in range, forming this pennant formation. Of course, a pennant formation is similar to a flag formation. They both contain what is known as the flagpole, and that's the point in time when you have a steep rise in price. That then is followed by a range-bound compressing market that is building energy as ranges contract. The thought behind this pattern is once it reaches the apex, there is a release of energy. And that release of energy will cause the market to have a spike in price. You can have a break to the downside or a break to the upside. However, typically, the market will break to the prevailing overall trend, which we have to acknowledge definitely since March has been up. And that's why I believe that we will see gold break hard to the upside over, let's say, the next couple of weeks, up to a month. It just needs to get to the apex. And then once we see that break, I think we will see a rapid ascent of pricing. Now, we did pull profits earlier this week when we were stopped out of our trade, and those profits were about $500 a contract on COMEX gold, so they were rather small. We are still long our silver positions. We are long GLD. We are long SLV along with Nugget. And I believe that it will be necessary for us to reposition ourselves from the long side in gold next week. The other factor that is extremely important to me and signals how strong this most recent rally has been is simply looking at the 50-day moving average, because in all essence, the last time gold was trading below the 50-day moving average for any extended period really came in March as the market dipped down before the pandemic became a global issue. And it is for that reason that I remain extremely bullish and look at this particular average, the 50-day moving average, as a key and critical level of support that must be held for us to believe that pricing will spike higher. The other level that we're looking at is the 23% retracement level that comes in at 1941. So you have the 50-day at 38, you have the 23 at 41, and as long as pricing remains above it and moves towards the apex, I do believe we will see a break, and that break will be to the upside. Lastly, I do want to take a look at silver. Silver did close lower in sympathy with lower equity pricing today. However, I see some dramatic similarities in terms of pattern identification when we look at a daily gold chart and a daily silver chart, because we can easily make a case for a flagpole here. And if we simply go from the series of higher lows and series of lower highs, we absolutely also get a pennant formation. I believe that we are approaching the apex of that formation, but are a little bit further away than we are in gold. I still am looking for silver pricing to once again challenge $30, which is the high that was achieved the first week of August when gold went to a new record high. And our absolute top call in terms of where I think this rally will conclude is approximately $34 per ounce. This has been Gary Wagner, wishing you as always good trading. We will talk to you on Monday for the next daily update and review. Have a great weekend. Stay healthy. Bye-bye.